Today, we are diving deep into one of the hottest real estate corridors in all of Central America. I'm talking about that premium stretch between Escazú and Santa Ana in Costa Rica's Central Valley. This place has become an absolute magnet for international investors, expats, you name it. So let's get right into it and really unpack the numbers behind this boom.
So it really all boils down to one big question, right? Why here? Of all the places, what is turning these two towns into such a powerful hub for real estate investment? Well, we're going to break down everything from the economic backbone of the country to the on-the-ground market performance to answer that exact question.
Okay, first things first, before you can ever really understand what's happening in a local market, you have to look at the big picture. You see, a strong real estate market can only be built on the foundation of a stable and growing national economy. So let's start there with Costa Rica's fundamentals. And that foundation looks incredibly solid. I mean, check this out. Costa Rica is projected to see a really robust 4.4% GDP growth in 2025. Now, that's not just some number on a spreadsheet, it's a signal of a dynamic, expanding economy, and that directly fuels confidence in long-term assets, like, you guessed it, real estate. But growth is only half the story, isn't it? You also need stability. And with inflation kept under 3% since 2024, the country's central bank is showing it has a really firm grip on things. For an investor, that means your money is predictable, it's protected, it's a huge green flag. The sheer size of the economy is also something you can't ignore. We're talking about a nominal GDP of $95 billion. This shows a mature, substantial economic base. So this isn't some small, fledgling market. It's a serious player in the region. And finally, you've got the central bank's monetary policy rate, sitting at a nice, stable 3.5%. This creates a favorable climate for borrowing and investing, and it helps avoid the kind of volatility that can scare off international capital. So, when you put it all together, the national stage is perfectly set for what's to come. All right, so we've established that strong national foundation. Now let's zoom in. Let's go from the macro view right down to the micro and put Escazú and Santa Ana under the microscope. What do the actual real estate numbers look like on the ground? Because this is where things get really, really interesting. And here it is. This is the hero number. The Central Valley is seeing an average annual appreciation of 7.65%. Just think about that. That figure alone puts this region in a super attractive category for any growth-focused investor. It shows consistent, powerful upward momentum in property values, year after year. And this table just breaks down how healthy the market really is. A median price tag of over $600,000, that tells you right away this is a premium area. In the new high-end projects, prices are blowing past $2,500 per square meter. And would you look at that yield? A gross rental yield of 7.84% is incredibly strong. You can get about $1,200 a month for a typical two-bedroom, and occupancy rates are high. So we've seen the powerful performance. The next logical question has to be why? What's actually fueling all this demand and pushing these prices up? Well, it turns out it's not just one thing. It's a really powerful mix of different factors all working together. You can almost feel the momentum building when you look at these four key drivers. First, you've got this massive wave of international residents. I mean, residency applications are up an incredible 660% year over year. Then you add in the digital nomads. Costa Rica is a top 3 spot in Latin America for remote work. Third, this whole corridor is a corporate hub, home to headquarters and embassies, creating this constant demand for high-end housing. And finally, you have the classic driver, good old supply and demand. There's just not a lot of land left in these prime spots, and that scarcity naturally pushes values skyward. Okay, so with demand drivers that powerful, you can bet the outlook is looking pretty good. So let's look to the future. What does the 5-year forecast tell us, based on all the current data and economic projections? The projections show sustained, really healthy growth. For 2025 and 2026, we're looking at a solid 7 to 10% appreciation. Then, as the market matures a bit, it's expected to level off. But leveling off still means an impressive 5 to 8% growth for 27 and 28. But here's the real headline. It all adds up to a projected cumulative appreciation of 35 to 50% by the end of the decade. That's huge. But numbers only ever tell half the story. Why are people choosing this specific corridor over any other? This is what I like to call the X factor. Those qualitative things, the advantages that go beyond the spreadsheet and make it such a uniquely desirable place to live and invest.
The lifestyle infrastructure here is genuinely world-class. We're talking top-tier hospitals, prestigious international schools, high-end shopping, all within minutes. It's incredibly well-connected, just a short drive from the main international airport. Security is also a huge draw, with a large expat community choosing to live in safe, gated communities. And from a pure investment angle, that tiny 0.25% annual property tax is a massive financial plus.
And really, at the end of the day, it all comes down to this. It's about a unique quality of life. It's defined by what people call a climate of eternal spring, where you're surrounded by nature, but you have every modern convenience right there. It's a compelling combination that, honestly, data can't ever fully capture.
So let's just pull this all together. We've seen a stable national economy. We've seen incredible market-level performance. We've seen these compounding demand drivers and a 5-year outlook that points to some serious growth. All of this data is screaming that this market has a very, very bright future. Which leaves us with one final thought. With projections this solid, the question really isn't if this market is going to keep climbing, but rather, who's going to be there to ride the wave?